Hey visionaries, Chris right here with Royal Realty Group, brokered by eXp Realty. Buying and selling a home can be a stressful process, but we are here to help you throughout the way. Feel free to reach out to us on all social media platforms at Royal Realty Group TX. Now enjoy the show with Cuff and Mo.
All right, so let's get this settled, okay? We had this conversation. First of all, I want to give a mad shout out to our audiovisual guy, Adam, who we share in common.
Yes.
Right? And it was at his wedding where we finally had the opportunity to meet. And you and I had some a pretty good debate / conversation that night. Mm-hmm. And so why don't you lay it on me? And Mo, you obviously you're there, but you're on the other side of the table.
Correct.
So we were going in on Kobe and Jordan.
Yes.
So
and then LeBron came in a little bit later, but I think we should go around and say, like, who do you think is the best player and why?
yeah, ladies first.
Okay, so obviously Kobe is the best player. I don't think that's debatable. Now, I will give you that Jordan was great, don't get me wrong, and I love Jordan. But, I mean, Kobe is a way more skilled, more athletic player than Jordan was.
Okay, so that changes the dynamic a little bit because when we were talking, it was more at the beginning, right? It was, who's the greatest basketball player,
Yes.
right? You said Kobe, I said Jordan, right?
Yeah.
If you throw the word athlete, that changes everything. And I think you'll come in with Braun.
No, I mean, we're talking about just skill set. Like, we're talking about a dude on the court who literally does everything at a maximum level.
So that's Braun.
Talking like
Yeah,
defense,
like, I'm
offense.
not talking about athletic gifts. I'm talking about from a skill set standpoint.
Okay.
Like, at any given point on the court, at any given time on the court, he's the best passer.
You're talking about LeBron?
Yeah. He's going to ride LeBron.
You got to think.
Even like defense, you would still pick LeBron.
If you lock those three in a gym and said one of y'all got to walk out of here, I put it like this: Kobe's the first one out the room.
Oh,
Like
my
you're
gosh.
talking. Have you ever seen?
Do you agree with that?
Have you ever seen LeBron James in person?
It'll be a long day.
I
know
mean,
that.
I haven't hung out with him, but I've seen him on the court.
Like
and-
you ever literally I used to work at ESPN Radio, so I used to get all those sideline passes and stuff. Like if you physically see him in person, you will understand why people are like, this dude's an alien.
He's a beast.
He's like they don't make those. Like he is a genetic marvel.
I agree with you. He's
So,
a beast.
Like he's got two inches and like 40, 50 pounds on Kobe, but all of Kobe's athleticism. It's not even a fair fight.
It's semi not a fair fight because he is a beast, and for his size, he is still so athletic. But I mean, from a total package player, offense and defense, and he doesn't even play defense.
What are you talking about?
He doesn't play defense like Kobe
You're talking
does.
about a guy who could guard any position on the court
1
in his
through
prime.
5. Yeah.
Kobe can guard 1s, 2s, 3s. That's about it.
No, he can go down the post.
Put it like this:
but
LeBron James is going to be the all-time leading scorer at the end of this year or by the beginning of next year, and that's not even his best trait. That's how good.
But when
he
you
is.
start talking about greatest player, I think it has to be Jordan. He set the bar, and everyone has to go meet that bar. Kobe's tried it, hadn't made it. Braun will never come close.
The book is not
right?
done being written yet.
It will never come
That's
close because of the losses in the championships. Period. In the story. You can't.
That can't be the sole argument, bro.
It's not.
what it is.
It's the defining part of the
we
argument.
get to this point. We have sacred cows in sports, right? Like it's the whole thing now with Micah Parsons and people want to compare to Lawrence Taylor, right? Just listen.
No.
Just hear me out. Just hear me out. We are all kids of the '80s, and so we love Nintendo. But if you'd have told us when we were all 9, 10 years old, hey, in 15, 20 years, there's going to be this thing called PlayStation that's going to blow Nintendo out the water, we'd have clutched our pearls and been like, yeah, right. No, we don't believe you. So if you'd have said in 1991, when Jordan won his first championship, hey, check this out. In like 12 years, there's going to be a dude who shows up who's bigger than Mike, who passes the ball like Magic Johnson, but can go get 50 when need to. They'd be like, that dude don't exist.
He's
the evolution of all this stuff. In 15, 20 years from now,
yeah, for sure.
there's going to be another person that shows up. It's going to be like, oh, this dude is more gifted than LeBron.
But
It's
here's where
evolution.
I'm going to
yeah.
say the line of demarcation is, and I know you love that, right? So Jordan revolutionized the game, both internally, inside the game, inside the NBA, and externally.
In what fashion?
In the terms of fashion,
Like what?
in terms of shoe, his brand with Nike, and how it completely has changed everything. And you got to understand that Jordan hit it at the right time. It wasn't hit, by stroke of luck or genius or anything. He just was the right person at the right time when they started really, putting a figure, a sports figure around the shoe. Now, obviously, you had the Bird and
Yeah.
a Magic situation or whatever, Kareem. You had, guys like that. But until Nike really made him the spokesperson, and then the emergence of hip hop coming out, like completely revolutionized everything. So for that reason, in terms of being an actual brand, you got to go hands down Jordan.
He is the roadmap, but LeBron and his crew have taken it
just
to
about to
another
say,
level, bro.
like next level.
Jordan wasn't a billionaire till he got done playing. LeBron is
No question.
actively playing and a walking billionaire now.
No question. And the dynamics from finance change, right, over time, right? There's more money in the economy now than there was 30 years ago, 40 years ago, right? Yeah. Can't necessarily hold that in LeBron's court as favor to LeBron. But for where we were and where the game of basketball went and who it went through, 23.
He is the fire hydrant in the neighborhood. You can't have the neighborhood without him, but that doesn't mean there's not like a better house down on the corner. You know what I'm saying? Like, he is the evolution of it all. Like, people just need to just get over it. Like, I think that Jordan is awesome too, but that if you ever seen him in person, like during his prime, you're like this dude's an alien.
Well, ladies and gentlemen, welcome back to the Vision Lab podcast. I'm your host, Ryan Cuffey, alongside my co-host, Mr. Ryan Mosley. Folks, it's time to clutch your pearls, if I can steal that from you, P.
Hey, man.
Man, well, I'm super excited about today. This has been obviously an amazing opportunity to get the one and only, and I'll let you do the introduction, but Visionaries, for all you guys that are tuning in, make sure you like, you subscribe, and you share, because this episode is going to be absolutely impactful. Mo, who do we have on the show today?
Cuff, today's guest is a native of Lewisville, Texas. She is the owner of the Mortgage Nerd Group. Please welcome Denise, the Mortgage Nerd Donoghue, to the Vision Lab podcast.
Hey, what up, and good morning. How we doing?
I am good. Happy to be here. Finally, we've been talking about this.
Yeah,
we've been
power
talking about this for a while.
manifestation is real.
I'm just glad the Cuff didn't double book us today.
Hey, all good.
Listen, we're gonna do that with the checkers on the board. We're gonna move them around like that.
I apologize.
Okay.
I couldn't help it.
Okay. No, but listen, Denise, I'm so happy to have you in the lab. I think it's actually pretty apropos. At the time of this recording, the Fed met yesterday. We're going to get into that, what that means. I think today's episode is really going to be educational, so you guys are definitely going to want to tune in. We're going to get into mortgages, right? It's the largest asset, largest purchase of most Americans, right? Most consumers that they will ever do. So it's time to take it serious. But before we get into all that, let's give a little bit of history, who you are, how you really got involved with mortgages.
Yeah. Well, it's crazy. I don't know if anybody ever wakes up and says, okay, I want to become a mortgage officer, but I was raised by a single dad. And I just remember coming home in high school, and we were in the Elite Four of the championship. And my twin sister and I, so when I say we, it's because I have a twin, we came home on the bus, and all of our stuff was on the outside of our house, of our yard. And my dad had lived in that house for 26 years. So if you think about it, 30-year mortgage, it should have been almost paid off by then. But he didn't have people in his circle and in his life to coach him or teach him really how to manage money well. And so what I had learned later in life is that he had done some cash out refinances. But I just remember being a 17-year-old in high school, embarrassed as shit with all of our stuff out on the yard. And at that point I was like, I never want to feel that kind of shame or anxiety or stress and then I looked at my dad, and I was angry at my dad at the time. But now I'm like, damn, I bet he felt horrible as the leader of our family, and having to see his kids see this. And so my sister and I, we researched like cheapest apartments in Lewisville, Texas, and we moved to the cheapest place in Lewisville, Texas, and just learned how to grind and learn how to really, you could either follow in that same path and be horrible at money and have horrible credit, which is what both my parents had, or you could be like, this pain is so horrible that I never want to experience it again. And fortunately, I went down that path. And so I just became fascinated with money and how to make money and how to multiply my money and how to really work smarter instead of harder. And so, long story short, went to college. I started an eBay business, paid for my college, and I was selling Jason Kidd jerseys, Dallas Stars jerseys, Mavericks jerseys, because before then, the internet wasn't what it is now.
Right.
And so I didn't have to have inventory. I could just go to the local mall and be like, okay, someone wants a medium Jason Kidd jersey and ship it out to someone in California.
You were doing retail arbitrage before it was.
Yeah, I was hustling it.
Shout out to Gary Vee, by the way.
Yeah. But that literally paid my way through school, and I graduated college. It was around 2006, and I couldn't get a job. The market was starting to shift at that point. The housing crash was right around the corner. So the only job I could get, even though I just paid a ton of money for this piece of paper to graduate from this school, was a one-call close, sales environment. And it was brutal. I mean, I got hung up on constantly. You had to do like all this personal development, listening to Tony Robbins. Like the company made you because you got such rejection all throughout the day. But you could make really good money. Company went under. And I was like, you know what? I'm just going to go learn how to be a financial advisor, get my finance license, because I was always fascinated with money. I had a negative relationship with money, though. I felt like people who made a lot of money must have been like drug dealers or they were bad people. So it was like I wanted to learn how to make money, but I still at that age had a negative association with people who made a lot of money. But got my financial advising license, learned how to like stocks and bonds and all that stuff. But I realized as a financial advisor, you only see so much of someone's net worth because they're skeptical of financial advisors, right? Like, it's like, is this financial advisor, how do they make money? I don't really understand what they do. And I'm going to give them this much to invest, but I'm not going to give it all because I don't trust you yet. I want to see how you do. Like, that's still very real today. Absolutely. But I learned as a mortgage officer, you see people completely naked. You see their credit. You see their debts. You see their bank accounts. I see that you're door dashing every day, but you don't have money for a down payment. Like, let's be real. So I just felt like I could make a bigger impact as a mortgage advisor if I treated it like a financial advising practice where it's not just getting a mortgage. That's just the vehicle for me to have a conversation with you. But when you work with me, it's beyond the mortgage. And it's truly a financial strategy that says, you want to put 20% down, but you've got $12,000 in credit card debt. Although you asked for that, I'm going to show you with numbers how I can save you $600 a month in cash flow because we're going to actually put 7% down, pay off this credit card debt, and we're going to free up that money and we're going to do something smarter with it.
Ooh.
Come on now.
Fire. Folks, it's going to be off the chain today. So, you had the experience with the dad and with your dad in the home, and obviously, a lot of times that's the catalyst, right? Like that's the spark that ignites the flame.
It's an inflection point.
It's the inflection point, And so, when did the mortgage thing start to become real for you?
I was at J.P. Morgan Chase, and I was a financial advisor. I was like 25, blonde. I don't know about you guys, but there's not a lot of people that have money that want to invest their money with a 25-year-old blonde. And so I was struggling a little bit with it. Then I was studying to get my mortgage license, and I left the bank in 2012. And as a mortgage advisor, when you work for a bank, you have an endless amount of clients. Like there's a ton of, mortgage clients. You could anybody that has a checking account, you could call. And at the time, rates were relatively low in 2012. So if you were comfortable picking up the phone and calling somebody, which I was, because that's where I came from, you could make decent money. But I knew if I wanted this to be a career, I was going to have to leave the big bank and develop my own clients and work with real estate agents in a purchase market, just because the refinance market comes and goes. So as we all know today, there's not a whole lot of people refinancing right now.
We're getting into that here.
Yeah. But as a mortgage advisor, if you want a long-standing career, you need a healthy amount of purchase business, which usually comes from real estate agents. builders. And so I just said in 2012, I'm going to leave the bank. I'm going to go out on my own. I'd never done a purchase loan in my life. I'd only done refis. I did one purchase loan in 2012 and royally screwed it up. Didn't know how to set up an escrow account. But it was interesting because every time I met with a realtor, I would ask them, like, what do I need to do to earn your business? And they just, every single one of them kept saying the same thing. My lender doesn't communicate. I send them a client. I have no idea what goes on. And I was like, well, damn, all I have to do is get really good at communicating and I could maybe make a career out of this. Mm-hmm. So that's just what I did. And I was consistent. And then I've developed systems and such. But yeah, it just kind of took off from there.
And definitely want to get into all that. You know, for me, I'm obviously in the lending business as well, right? So circa 2012, you've left the bank. Talk to our viewers, talk to your audience as well, right? Like, what does that look like in terms of, did you join a shop? Did you just say, hey, I'm Denise, I'm going to go and, you know, I'm going to, like, how does that work for the everyday person that doesn't understand what that means?
Sure.
Did you work for somebody? Did you open up your own brokerage?
Yeah. No, I left and I worked for a company. It's called a correspondent lender. The easiest way to describe it is people would categorize it as a broker. So I wasn't the CEO. I wasn't in charge of hiring people for payroll and things like that. I hung my license there, but it was straight commissioned. So you eat what you kill, which I didn't have a problem with because I'd pretty much been straight commissioned my whole life. But if you didn't close a loan, you didn't make a paycheck. And so whereas at Chase, you still made a small salary. And again, you could run through a database at Chase and sort through, okay, this person has 25 grand in the bank and has a mortgage rate of over 5.25. Let me download a list, and you would have hundreds of clients. But when you leave the bank, you have no clients.
Yeah.
Pipeline gone.
Yeah, pipeline gone. So you got to hustle. And so I left. I hung my license at a local company. And at that point, I just said, I think I was like 26 at the time. And I was like, let's go. Let's hustle. I don't have a problem hustling. I don't want easy. I just want possible.
Yeah, I love it. Love that.
I'm going to write that down. I don't want easy. I just want possible.
Mm-hmm.
So let's break this down because Fed met yesterday, but I wanted to talk about what a mortgage is, why this is so important. How can we educate our visionaries that are out there, the nerds that are watching? What do they need to know about a mortgage?
So the thing about mortgages and real estate is I truly believe that if you want to build wealth for yourself, one of the easiest paths to do that is through home ownership. I tell people I'm not just a mortgage officer. I help people build wealth through home ownership. But the sooner you can start that and the more strategic you can start it, the more wealth you'll have later on in life. So a mortgage is essentially when you go and you buy a house, it's the loan that you have to repay on the asset that you own, which is the home. And your home versus, let's just say, renting. Because for the renters who are listening right now, they're just as frustrated. The rent's been going up like crazy. Like my mother-in-law's rent just went up $350. One renewal. I'm like you're on fixed income. That
makes a difference.
It makes a difference, right? And so they're just as frustrated. And so the thing is when you buy a home, there's many ways that you make money on that. The house appreciates in value, which means if you buy a house for $300,000, if there's a 5% appreciation, the house is worth a little bit more the next year and the next year and the next year. So your asset is making money just through appreciation growth. Shout out to DFW. Every 6.5 minutes, you got a family moving here. So our demand here in DFW is like through the roof.
Shout
We're
out
lucky.
to the state of Texas. I've had a lot of conversations about all this stuff today.
No,
Yeah.
y'all go
Yeah.
back home.
Shout
Y'all
out
go
the
back
state
to
of
the other
Texas,
states.
man.
Hey, it's nice. The demand here is still fantastic. So your asset that you bought is appreciating in value. Every single month when you make a mortgage payment, there's a portion of your payment called the principal amount. And that is kind of like putting money back in your pocket because you're paying down your loan balance so that when you go sell your house, you have more equity when you sell versus when you make a $1,800 a month rent payment.
Nothing to show for it.
Nothing to show for it. Nothing's going anywhere. So you've got the home appreciating in value. You've got the amount that you're paying down towards principal. And my favorite one is this asset can be turned into passive income if you can turn it into a rental or if you can get some roommates and help you cover that mortgage. And so right now, these millennials, what's so fascinating about them is some of their parents went through that housing crash. Mm-hmm. So kind of like me, they don't have the traditional values anymore that our parents had. Like you have to get married before you have kids. And there's some traditions that they're breaking that they don't want to follow through on. And some of that is also in real estate. They're like, I want to buy this house, but I want to buy it with my 2 friends. And we're going to all pay for that mortgage. And because they're getting the fact that they don't necessarily want to stay in that home for 30 years, but they see the value of what real estate can do. And so that's if you're a first time home buyer, buy a house. I recommend putting very little down. That's another topic. Put a little money down, stay in it for a year or so, however long you want. I don't care if it's 6 months. Then go buy another one and turn that one into a rental. You got a primary interest rate on it. You could put little money down, stay in it for a year. Your next house is a primary, so you get a good rate. You can put little down. You get a lease agreement to offset the payment on your current home. Now you're building and establishing a rental portfolio with very little money down. And if you can learn that in your 20s when you buy your first house, it doesn't matter if that's your dream home. You're not going to stay in that house for a long time. That money's going to be a cash cow. I promise you. First house I ever bought was single, scared to death, $149,000 in Frisco, Texas. I still have that house. That house is worth way more. Appreciation gain.
That house is probably worth about $500,000 or $600,000 now on the low end, I would imagine.
And I put like $9,000 down, which thanks to Obama, I got an Obama grant, so I got my down payment covered, and I still have that house. And a tenant has been paying the entire payment for the last, 10 so years, and that house just continues to go up.
And
so
they will stay there too, given the economy.
Yep. Cash cow. So it's like,
Well, even if they don't, it might be, and don't want them to leave. But if they don't, you get to replace it with higher rent.
I know. Yeah. And so a lot of people fear renting a house out because, of course, just like the news, people love to hear about the doomsday and all the problems that happen when you have tenants. But at this stage, I own quite a few rental properties, and I don't have a lot of problems on them. But I try to go after those first-time homebuyer homes so that the tenant might be a single mom with a kid, or some dad that is living in the Dallas area that doesn't wants a smaller house, not this massive house. If you do it right and you have somebody helping you with these strategies, which is what I wish somebody would do with my dad, but you only know what you know based on the people you grew up around or what your family knows about finance. And I always thought you had to make a lot of money to talk to any financial advisor. I was ashamed. What financial advisors want to talk to me? I make $32,000 a year. That's what I was thinking when I was 25. But that's just stinking thinking. You can go meet with a financial advisor and they'll give you some pointers, or a mortgage advisor that cares, and they could set you up, for life.
You got to be disciplined, and you got to follow the strategy.
Yep.
So, we're talking a little bit about what mortgages are, right? The Fed met, as I mentioned, at the time of this recording, it was yesterday. What does that mean for consumers?
Oh man, it's so many people get confused when the feds meet and they increase the federal funds rate. So I'm going to sum this up in a 2-minute nerdy lecture, but the federal funds rate actually has nothing to do directly with mortgage rates. The federal funds rate impacts things like credit card rates, car loans, business loans, and it's something that the government has always done, because guess what? This isn't the first time we've been in a high inflation or recession period. But it's a tactic that the feds have always done to essentially make it so expensive for consumers to borrow money that it slows spending down. And so what they're trying to do is decrease spending, which has been tough coming after COVID because
everyone was pent up on the sidelines.
Everybody was pent up on the sidelines, and we pumped out a lot of money for PPE loans and forbearances. People's biggest expense is their housing expense. And we allowed forbearances for over 12 months. Yeah. So they couldn't travel. They were pimped up, and then they've got all this money. And so people are getting frustrated with where we are because the tactics that we're using, of course, hasn't worked fast enough for the Americans. It's never fast enough for us. But mark my words, November 10th, which is right around the corner, the new inflation numbers are coming out. It's called the CPI numbers. And the 30-year fixed rates are directly related with our inflation numbers. And if you look at the year over year of those inflation numbers, the 30-year rates always follow it, except for when Trump was in president, and then even when Biden took over. So they both, I don't care what political party you're part of, they both did it, but they froze the 30-year rates in 2021, and they didn't unfreeze it until January of this year. So both people
And that was
are
because
responsible.
Everybody
That was
got their
because
hands
of-
in the pot.
Yep.
That was because of what though? There was a major world catastrophe that was going on called COVID, right?
Yeah.
So
Yeah.
a lot of it had to do with that.
Of course, the COVID and then, the war with, like, these things you can't predict, but they froze it because they thought that that's what the best thing to do is. And you could Monday night quarterback thank God I'm not the president because it's so easy to place blame. They should have released it sooner. They didn't. If I was in their shoes, would I don't know. No one's ever been through anything like this. But the fact is as soon as they released the freeze on these 30-year rates, what did rates do? They jumped and they followed exactly where inflation was, which is why we started seeing an increase in January. All this is to say, I've got a video on this on my website, but November 10th, the most recent CPI or inflation numbers are going to come out, and we will finally see what we've been doing all year long with what the feds have been doing with the federal funds rate start to pay off. And I am predicting on the market, on the record, that by February to March, we will start to see these rates come down because every single month from here on out, now that these really low CPI numbers have been flushed out because it's a 12-month year over year, we needed July, August, and September numbers to flush out. They will be flushed out starting November 10th because November is reporting October's numbers. So we will start to see the benefit of what everyone's been freaking out about with these rates. But I'm like, listen, if you went to Starbucks this morning and you bought your Starbucks on a credit card, you should be more concerned about what rate you're paying on that credit card
right.
than potentially your mortgage
right.
because that's what people aren't focusing on.
Yeah.
Yeah.
You say all the time people get upset about the mortgage on their house, but
Yeah.
they'll pay their 12, 13% on a credit
Yeah.
card and not blink an eye.
Well, and that's
Exactly.
the thing I talk to people about because I'm on the refi side,
Yeah.
right? And so hey, I've got this 3% rate. Well, listen, that's fantastic. I totally get it. It's sexy, right? 3% on 600,000. Who wouldn't want that?
Yeah.
But you also have $50,000 worth of debt, and 80% of that is a credit card or
Yeah.
credit cards. Over the course of 8 or 9 different creditors, right?
Mm-hmm.
And so you have no problem paying 18 to 25% on $35,000, because you don't want to get rid of the 3% on your 600.
Yeah.
Right. But if you start to count the cost, which is something I always talk to people about, why don't you count the cost? Because you don't go to Starbucks and pay with your 3% interest rate on your mortgage,
Exactly.
right? You don't go to Target and pay with your 3%. You don't go to, Costco or whatever. What are you paying? You're paying with your disposable income. So, sir, ma'am, you're spending what
Yeah.
you're actually spending every month, $1,800, $2,500 on all these different type of credit cards, is prohibiting you to actually go out and have more disposable income. But I want to marry to this
Yeah.
3% over
Yeah.
here. It just doesn't make sense.
I think part of it is a psychological
Oh.
shift. Yeah, because it's like people have more equity than ever in their home, but they also have more credit card debt than ever. And Americans, we need a new car like every 2-3 years.
Yeah.
So that rate on that car is going up too. And it's like you have all this equity. What if I showed you that your total outgoing monthly expenses could decrease by $200, $300, $400 because we tap into this equity and wipe out your credit card debt? But it's like psychologically we have a problem with
We fall in love with the sexy rate.
on the mortgage because it's like, no, I can't touch this rate. That's bad. And it's like, but this credit card debt is quicksand. It will literally bury you if you don't get out from under it.
Not to mention that most of them are variable rates. Of course, you have your introductory. I'm not
Yeah.
talking about that. Like,
Yeah.
I get it. They're variable rates, and it's tied to the prime rate. So if it goes up, guess what? Those credit card payments are, the payment on that $40,000 of credit card debt is going up on you, sir. That payment on that $5,000 that you have on that Amex card is going up on you, sir. So people, I try to coach people and talk to people about that, and I'm so glad that you tapped into that. Let's not fall in love with the right people, but
Yeah.
let's fall in love with having a little bit more disposable income because
Yeah.
we're going to need it here, and we'll want to talk about that here shortly.
Yeah, and I think as a society, because we live in a world with social media and gram life, and everyone's posting these shiny objects and these vacations that they're on, and I think what is sad is that there are a lot of people, and if you're listening and you're one of these people, like, don't be like my dad and be too prideful to ask for help or just see if there's another way when it comes to finance, because I think people get shameful about the credit card debt. And I feel for them because it keeps them up at night and they don't know a way out. And they think that tapping into their mortgage is such a bad thing, but it's like, just talk to an advisor and get out from under that, because you don't want that snowball to get bigger and bigger. And then God forbid you lose a house because you just didn't know of a way or you didn't ask questions. You know, don't be shameful.
So we're talking like all this mortgage stuff. I have to ask, why do you have the name The Mortgage Nerd? Because that's how I was introduced to you. Like, this is The Mortgage Nerd. So why do you have that name? What's the origins of it? Clearly you know what you're talking about, but why?
Well, I mean, because of my upbringing, I did become super fascinated with money, with finance. And so growing up, I was always a nerd. Like when I was in college, my friends were going out to the bars and I was working 2 jobs and trying to figure out a way of how to get out of this rat race. Like I didn't want to be owned by a company. My brother calls it FU money. I don't know if we can say that on here, but okay.
I told you.
Come
Before
on.
we started,
All
say
right.
what you want to.
What is FU money?
So FU money means you make enough money that if someone like steps to you or challenges you or your CEO is like, yeah, I need this, you can be like, FU, I don't need your money because I got my own. So he taught me FU money and mailbox money. And so I've always been a student of learning finance, trying to work smarter, not harder. And then when I got into the mortgage space, you know, people couldn't spell my first name. They damn sure couldn't spell my last name. They could hardly spell mortgage. And I'm like, look, I don't care what you call me. Just put me in your phone as the nerd, because I do incorporate finance into my mortgage strategies. And so it just became the nerd. But a funny story is the CEO at the time of the mortgage company I was working at, like super mega rich guy. I was kind of intimidated by him because he was like a world traveler and his parents were loaded. And I'm like, oh, he like drinks out of fancy glasses and stuff. And I'm like, where's the goldfish? Like, I'm like so white trash. But I'm like tried to make sure my shirt was ironed the day he came in. And but he was hearing me say, like, I'm just gonna go by the nerd. It's easy for people to remember. People laugh when they hear it, but I truly in my heart am a nerd. And he sat there across the table from me, and I had mad respect for him because he seemed rich and owned a company. And he was like, you shouldn't do that, because you are putting yourself here and the client here, and you know, in his world, because he's affluent and I mean he's always up here.
It's always an ego contest.
And I was like, damn, but like in my heart, I'm a nerd, and I feel like getting a mortgage is so vulnerable. You pull your credit. People are scared to death that they're going to get rejected. Their credit isn't good enough. I'm not going to qualify. And I'm like, but I kind of want to be here. Like, I don't want them to be intimidated with a mortgage conversation. So for the first time in my life, I was like, no. Like, you might be smarter than me and have more money than me and you own this mortgage company, but I'm going to roll with the nerd. And to this day, we have a really great relationship. He'll see like some billboard with a chick on there with glasses and he's like, damn it, you were right. Like, you know, because like social media wasn't around at really that point. But from that point on, I just committed to the mortgage nerd, and it's been my brand ever since.
So I want to switch gears because this is the Vision Lab. But before we do that, allow me to say thank you to the good folks at Blowing Smoke Cigar Lounge, Edwina, Jacoby, the entire staff there. Visionaries, check out this commercial right quick.
Hey everyone, Edwina Brown here, owner-operator of Blowing Smoke Cigar Lounge. We're located at 1604 North Interstate 35E in Lancaster, Texas. We would love for you to come see us. We stand on the 3 C's, which are cigars, our community, and our culture. Cigars, we have over 300 SKUs in our humidor, and it's still growing. Come check it out, a massive humidor. We also love our culture here, which we're about customer service, as well as community, which is why we're excited to partner with the Vision Lab podcast. So come check us out.
Visionaries, again, you know, we don't have anything on the show that we don't stand behind. If you're anywhere in the southern part of the Metroplex, make sure you get the Blowing Smoke Cigar Lounge there in Lancaster. Thank you, EB, for all your support. We look forward to seeing you at the anniversary party very, very, very soon.
What up, E?
So this is the Vision Lab, right?
Yep.
You made a move, and obviously, you know, you in your 20s and whatnot, you had nothing to lose, but you stepped out there. Like you said, you realized, like, okay, in order to do what it is I want to do, like, I'm going to have to kind of take control of my own ship.
Yeah.
When you stepped out there to do your thing by yourself, essentially, what was the vision you had for yourself at that time? And then I also want to backdoor it with, what does it look like now that you're in this super cool position that you occupy?
Well, when I left the big bank and went out on my own, so to speak, I attended a conference in California. It was my first mortgage conference I'd ever been at. Because, you know, at the bank, you just drink the Kool-Aid. You only go to the trainings that they go to. And there was probably about 2,000 loan officers nationwide, and there were speakers up on the stage. And there were, for the first time, I saw people up on this stage who have similar upbringings of mine, come from nothing, parents not fantastic, but they were having all of this success. And so I looked at those people and I was like, I mean, if they can do it, why can't I do it? And so I think being able to see that and hear the money that they can make. And I was like, if it takes hard work, I knew I was never that girl who graduated college that wanted to get married and have kids right away, which in the South, that's kind of what you do. Is some people call it the MRS degree. And
good.
Yeah, but I never like daydreamed about a wedding dress or getting married, or I always, probably because of how I was raised, it was like I wanted to have the money foundation right before I even thought about bringing a human into this universe. That's just me. So I sacrificed my 20s and I hustled, and I would do like open house crashing. That's what I called it. I even bought the domain name. I have no idea why.
Well, hold on, time out. What's an open house crashing? Please explain.
Okay, so it's not as cool as wedding crashers, but you would, as a loan officer, like you would do anything to get in front of a real estate agent.
Oh, look at you.
And so I didn't have any money, so I didn't want to pay for coffee. Like you know what I mean? Just to have 15 minutes of your time, and maybe we don't like each other. So again, trying to think smarter, realtors are stuck in a house on an open house for like 2 hours. And if the market's down, they're bored.
They got time.
So I was like, well, I knew if I could get in front of them and charm them a little bit and show them that I'm working on a Saturday or Sunday. I'm just in the neighborhood, just want to pop by. I wasn't like, I don't live in the neighborhood, but I would go to a nicer neighborhood. But my goal was to add 5 realtors a week to my database, and then I would drip on them. But I didn't do the cold calling, or because I felt like I could speed up that courting time if I could just get in front of them. But I didn't want to have 5 coffees a week. So I would just pick 5 open houses. I would go every single weekend, build up my realtor roster, drip on them every week. And that's just how I slowly built it. So
kudos to you.
Yeah.
I love the ingenuity. So not to, I hate to sidetrack you, but your vision, right? So, okay, I want to speed this up.
Yeah.
Obviously, I'm essentially working for myself.
Yeah.
What was the biggest fear you had as you embarked on that road?
Not being enough.
In what way?
Not being smart enough or not being deserving enough. And then once I had reached, it was like in my 20s, all I wanted to do was hit 6 figures. It was like, I think my dad, the most he ever made was maybe like $65,000. My mom's always struggled. And so it was like, man, if I could make 6 figures, I would make it. And it was
rich.
Yeah, gosh. And so it's like, then once you hit that, it was like,
not enough.
Yeah, it's not enough. Or I was expecting this feeling of like fulfillment. Mm-hmm. But I am a competitive person, like Kobe, the #1 basketball player. And
the joy is in the journey. I know where you're going.
Yeah. So it was just like, okay, well, what if I could get to this level and then this level? And then I had an epiphany that was like, it took me a while to learn that why couldn't I earn a certain amount of money? Like I'm worthy of that. And I don't have to sabotage that because I told you from the beginning, if you made a ton of money, that meant you were a drug dealer or you did something illegal or
something nefarious.
Yeah.
The people that do things the right way don't make that much money.
Yeah. Or if you do make that, like you're definitely an asshole, And so I was like, I don't want to be an asshole. So it was just weird. I couldn't break through this ceiling for a long time. And then when I finally was like, you know what, I am worthy of it. You can be a good guy and make good money. You can make an impact and build a business and build a team and hire people and give them opportunities. And that today I get more fulfillment on is like watching my team and my people grow and reach their potential when they don't see it yet, So,
one of the things that I'm hearing from you, and you haven't even said it, but I'm learning, right? And then I think this is part of the joy of having a podcast is because we're constantly learning. You're all in on one specific thing. Mm-hmm. How important is it for people to be successful, right? To be all in and not to have, stranglers out there in other industries or what have you?
I think it's super important. And I think that especially if you're younger in your 20s or heck, even if you're 50 years old, I think society sometimes teaches us to not quit at something because quitting's bad. But I think you have to be quick to learn. Like if you're in this job that you go to from 8 to 5 every single day and you hate it, you can't stay there every day and do something that you hate to do. And I think there's a fear of quitting that to find your passion.
It's a slow death.
Yeah, it's like every day it's just a slow. And then what are you teaching your kids when you do that? I think society also teaches you that it's you're like my older sister's a prime example. She graduated.
How many of there are y'all?
There's a lot of us. No, twin sister, older sister, and a half brother. It's we have like me and my twin. We have the Nerd and the Bird podcast, and my older brother. He's like, well, I mean, can I get on this like Nerd, Bird, and Turd? I'm like,
There you
okay,
go.
definitely not, bro. He's like, I want to get in on it. No, but I think that you have to go all in, and I think you can't be afraid to step out of something that you're not into to find what it is that you're passionate about. And once you find it, go all in.
Yeah.
Like otherwise you're just selling yourself short, you're selling your family short. And it's scary. No one's saying it might not be easy, but if it's possible, go all in.
10 toes down. I said all the time, like put your hands in the dirt and get to it, man.
Yeah.
So I want to kind of get back to the education, right, of mortgages and understanding for our audience, for your audience, to have a better understanding on how to navigate through these loans. Let's talk about what's going on right now. Okay.
With the interest rates?
Interest rates have in my opinion, they've been going up since August of 2021, right? Bigger uptick in February, massive uptick in May, I think is what it was, and then ridiculous in September to October.
Yeah.
But all that being said, for those that don't pay attention, because we had this 2.5 year window, give or take, I always tell my clients like, hey, the barn doors are open for 24 months. If you didn't get in, kind of your fault, right?
Yeah.
But where we are now, and I understand, and every lender says this, I don't have this crystal ball. Right, we get it. Where we are now, what's going to happen, right? So for those consumers that, haven't been paying attention or just don't know, like what should they be expecting with rates and how do we navigate these particular channels?
In my opinion, rates are artificially high. So I think for a long time they were artificially low. We were recovering from the housing crisis, and then with COVID, we kept them artificially low. But inflation rate is through the roof, and so the mortgage rates are artificially high. My concern, so if you own a home right now and you're happy with the home, but in the last few years, it was like some people would get bored. It was easier to sell a house and buy another because rates were low. You could make good money. But if you're that homeowner right now that's sitting on a house that is good enough, this is probably not the market for you to sell and buy in. Like unless there's a death in your family, a divorce, or like there's a dire need, you're relocating, sure, then you have to sell and buy. But if you're just bored, sit on the sidelines and wait it out. Don't just make a move because you're bored. If you're a renter, my fear and concern with people who are renting right now who have made the decision that I'm just going to wait it out is that we just came off of a fast and furious last 2 years. And so let's compare the markets. The market before, the only way for you to get an offer accepted is you had to offer over list price. I'm talking like wads of cash. Yeah, way over. Yep. FHA buyers, first-time home buyers didn't have a good chance. You had to waive your appraisal. You had to waive inspection. It was like giving up your firstborn child. And so a lot of these first-time home buyers or renters were sitting on the sidelines because they couldn't even compete. We're in a market now, let's be real, rates are higher and home prices are higher, so the affordability isn't what it once was. That doesn't mean that you can't buy a house. It just might mean you can't buy the house with the third-car garage and the granite and the hardwood floors. You might have to humble yourself a little bit and get into something that isn't what you thought you were going to be able to buy for your first home. No big deal. As you make money, you can update it. But my concern is that when these rates start to fall, and no, we don't have a crystal ball, but mark my words, they will start to fall very, very slowly after November 10th. If and when these rates come down, all these people who have been sitting on the sideline waiting for this exact moment, what's going to happen? You're going to have pimped up, demand again. Our supply is still really low. Like you talk to any real estate agent out there in DFW, the supply is still technically a seller's market. So when these rates come down, now these buyers, especially the first-time home buyers, are going to be back to competing with these people who could sell a house and have wads of cash, and they might be pushed out of the market again. So I'm not saying that you should look at buying a house now, but I think you should start the conversation, even if your lease is up in June or whatnot, because my concern is that when these rates start to come down, it's going to get tough again for these first-time home buyers.
So I want to switch gears, staying in the same pocket, because we talk to consumers a lot, right?
Yeah.
What about the loan officers that are out there? We got shops that are closing up
Yeah.
left and right. I've had a buddy of mine that, I mean, I can't tell you how many people have lost, you know, the way that they make their living, right? Had a guy come into the office the other day that I personally know that his entire shop got shut down. So
Yeah.
In this market, what are you telling them?
It's real. I mean, I think there's more mergers too, like companies merging together, banks getting bought out, people losing their jobs, especially loan officers. It's funny. I just read on social media, it was like the 5 worst jobs you can have in a recession. Number 1 was real estate and number 2 was construction. I was like, oh, great time to be a loan officer. But
Tell me about it.
yeah, the truth is that if there's a loan officer out there that you know, or in your family, a processor, an underwriter, anybody that's in that real estate space, they are struggling. I think industry average production is down 30%. And if you're a refi-based lender, they're really struggling. And so I hate to see people get out of the business. We're in a time where we're lucky where, I know it doesn't sound sexy, but like pick up those side jobs, pick up those Uber Eats, pick up what you can to supplement yourself for the next probably 6 months. There will be a refi boom that comes back. But how can you provide for yourself and your family for the short period of time until things start to come back? You know, so it might mean picking up a couple of jobs. And I know that might not be ideal, but there will be, in 2019, rates got high and nobody would have predicted, and there were a lot of layoffs in 2019. Nobody would have predicted at the end of 2019 that 2020 would have came, COVID would have hit, 30-year rates would have been in the high 2s, and loan officers would have had career-breaking records for 2 straight years. Mm-hmm. You know what I'm saying? So it's like you have to weather the storm, but if you're not making enough money every single month or there's layoffs, then you're going to have to get potentially another job or a side job, or because that is part of the storm of being in the mortgage space.
You know, one of the things I was, when we were at Adam's wedding, when we had a conversation, we were texting kind of offline, and you said, "Hey, I got not a symposium,
the Nerd Academy."
No. You had a Zoom meeting with a bunch of realtors.
Oh yeah,
and I jumped in there and I got a chance to listen to your webinar. That's what I'm trying to say, right? So you had this webinar. I love that approach, and we all have 24 hours in a day, right? And you're leveraging every minute of each day, right? So the production, albeit for you, probably is a little different, but production for folks is maybe down. But this is an opportunity to network, to connect with realtors, to have these type of webinars where you're providing value.
Absolutely.
Right? So that when it does turn around and these, the millennials are buying homes or whomever, right? You're in the position to have those relationships, finally become fruitful.
Yeah. What I'm doing right now as a mortgage professional is I am trying to educate as many people as I can. I think real estate agents are scared. They are. And their market has changed just as much.
And
so
getting out the business as fast as
just
the
as
LOs.
fast.
Yeah,
so
they went from just putting something on MLS and their phone blowing up, and then now all of a sudden it's like, oh, I got to do real work.
Yeah, and
they're jumping out of the ship.
Yeah, and so as a loan officer, I always try to be a partner to my agent. If you're only using me to get a loan done, then I'm not doing my job. I do try to. Most of the time, realtors give us business. We don't have a lot of business to give back to them, but I can give back my business sense. And so right now, more than ever, realtors need to be educated on strategies to help listings sell faster, loan programs that can help people afford homes better. And so the more that you can pump out knowledge and education, like a lot of people use the word value, you got to add value. Value really just means you have to educate them on maybe something like the 2-1 buy down, which is a loan program that you haven't heard of in over a decade because we haven't needed it because rates have been low for forever. So we've only had plain vanilla for like 10 years, which is a 30-year fixed. But now we've got some of those exotic loans coming back, and it doesn't mean that they're bad loans, but you have to educate them on why they're not bad because they might have a psychological association that it is a bad one. So how are you presenting it? I don't ever call it a 2-1 buy down. I call it a date the rate loan program. Why? Because if I tell you it's a 2-1 buy down, you're going to shut down. You're not even going to hear me out on why it's good because your grandfather had it back in 1970, whatever. You know what I mean? And so I'm teaching realtors as quickly as I can, which typically means Zoom webinars. We try to do some in-person, but it's hard to get in-person. I just started doing these Zooms. Game changer, by the way.
It is.
Adam made fun of me because I'm a Zoom rookie. Even after COVID, I'm a Zoom hosting rookie.
Hey, Zoom, if you own stock in Zoom,
It's gone down.
What is it? Zoom? What's it? GoToMeeting? All those platforms.
Yeah.
I'm sure COVID was
You
quite
missed the
nice.
boat.
Missed the boat.
Yeah,
It's
absolutely.
too late. It's too late.
Yeah, we missed it.
Yeah.
But I mean, they walked away. They have a tool that they can use to calculate. It's just like every week I'm trying to do something because if I can teach one agent something that helps them sell a listing, they're going to remember me as the mortgage banker that can be a business partner and get the loan done.
Yeah.
So if you're a loan officer and you're like, well, crap, I don't know what I could teach, go to YouTube and type in top real estate strategies that I can use as a real estate agent.
Mortgage note will pop up for sure.
I go to Tom Ferry's stuff all the time, and I'm learning and downloading free stuff from Tom Ferry. He's a big real estate coach, and all I'm doing is studying what he teaches the real estate agents to do, and then I regurgitate it in a nerd way that is digestible, that a 4-year-old can understand, because that's about as much as what I can understand, and I teach it in my fashion. I'm not necessarily coming up with it.
No, this 2-1 buy down is interesting because I'm familiar with it, right? But I'm driving into work and I hear, I don't know if I should say, Rocket Mortgage on the radio talking about, hey, we'll lock in your rate at this, and if the rates get better, then you're protected and you can it's just a 2-1.
Yeah.
That's all it is. But they're not calling it that.
And that's the thing is, it's just coining terms, and I'm kind of the queen of coining because I want my programs to sound different, but I don't want people to hear. So we have a bridge loan type, but there's a lot of companies that have bridge loans and they work differently. So if I tell consumers I have a bridge loan, they're going to think it's the bridge loan that this other loan officer told them, and it's probably not. So I don't call it a bridge loan, even though technically it is, because I don't want them to associate it with what they've heard. And so some of it is just coining terms for it, but that's where as a consumer you also have to be careful because they think that they're signing up for a 5% 30-year fix, and
Got to
it's
read
like,
that fine print.
where's that I actually have a magnifying glass, and I like show it in my videos, like you better get the magnifying glass
It's
out.
so funny because somebody said, oh, well, rates are like, 7% or whatever. And they'll say, well, I just saw on TV that it was 4%. Well, you got to read the fine print.
Yeah.
That's, if you're at a 60% or less LTV,
800 FICO score,
800 FICO score, and all this
unicorn
stuff.
in the backyard.
It's like,
yeah.
6-point buy down.
Yeah.
All this stuff. So,
Yeah.
for sure.
So I want to pivot, right? Because this being the Vision Lab and the backdrop of this show is, it's all about growth mindset. And clearly you have one. When I say the term growth mindset, what's the first thing that pops in your head?
I would say open-minded and abundance, always be learning. I think that's the thing for me is always be learning, but truly, I know it sounds so cliche, but the people you run around with, the circles you run around with, they can either drag you down or they can bring you up. And so I'll give you an analogy because I have kind of a crazy family, not my siblings, but basically everybody outside of that, they're a little nutty. And if you imagine a bucket of crabs, it's like when the crabs are trying to crawl out of the bucket, which means like when one of you is you're on the brink of success. But what does a crab do is they grab that crab and they bring it down at the bucket. So if you are rolling with friends that are really crabs where you start to change, you start to grow, you start to make more money, you start to make better decisions. If your friends are those crabs pulling you back down, you might need new friends, even if they've been your boys since elementary school. I think guys have a harder time with that than females. Like my man's been friends with his group like since elementary school and they're ride or die. And I'm like, but that one you probably shouldn't be ride or die for anymore because he's a crab. Like you want to get in some trouble, you hang out with that guy. But you really have to analyze like who's at your table and who's cheering for you and who's lifting you and who's pulling you down. And you have to identify that. And
how do you deal with that if it's somebody in your not if it's somebody in your home or in your immediate family?
I'm suck at it. My dad was a military guy and he was an abusive guy. And so as kids, we always learned we were people pleasers. We always put my dad's needs before our own. And so growing up, we have a tendency to keep everybody else happy before ourselves. And so when it's our family, and I call them toxic family members, because my dad is now a toxic family member, it's hard because that's your blood and that's your dad. And it's like, you wouldn't be here if it wasn't for him. He helped raise us. There's a lot of stuff that had happened, but it's like, I got to a point where I said, I can't, this relationship is toxic. And unless you make changes, you can't be in my life like this. Like if I see you at Thanksgiving, we'll be cool. He lives in the Philippines now, so it's all good. But so that's another podcast. He's the Hugh Hefner of the Philippines. We'll just put it like that. Slick Rick. We call him Slick Rick. Slick Rick is the only 6'5" white guy out in the Philippines. But anyways.
He's the unicorn.
He's the unicorn. But that was so hard to do because they're your family and that's not how you're taught. And our family is a very, like my dad was like, you need to be loyal. He's an East Coast guy. And so it's like, even if you're doing some shady stuff, we would cover his butt because that's what we did. You had to protect the family.
You're making it sound like you were hiding some bricks underneath
There might have been some bricks. But so it's, I'm not great at it. That's something that my husband has helped me learn is like, just because they're your family doesn't mean that they can treat you like that. But I'm not great at setting the boundaries with family. Now, other people, I'm like, yeah, like, peace out. I just stiff arm you. Like, I shut people off pretty quickly. But with my family, it's like, I mean, you could do me wrong 15 times. I'm like, okay, fine. But you're my family. So it's hard.
I think it's a time, Cuff.
Man, I don't want it to stop, bro.
But it is what it is, huh?
Yeah. Before we land the plane, I do want to touch on a couple of things. We just came out of this period, 24 months, right? Barn doors are wide open.
Yeah.
Get your cash out. Now, I know you said it earlier, but I really want consumers, I want our visionaries, I want the nerds out there to understand those doors have closed, right?
Yeah.
What is the market's super tight, right?
Yeah.
And it's compressed. It's a compressed market is what we're in. What does that mean, and why should our consumers know about that, and what should they do in this time frame?
I think the first thing that anybody can do is have a conversation with a lender and a real estate agent. Everybody lives somewhere, I don't know even where some of you guys are listening from. You could be in Ohio. The market is very different in Ohio than it is in DFW. But you've got to speak to a lender. It's kind of like going to the doctor's office. If you say my foot hurts, like that doesn't mean much until you take that x-ray. And that's what a lender is going to do is, even if you're not thinking of buying for a while, but the lender needs to do that x-ray so we can see what the FICO score looks like. If there's blemishes on your credit, we have the tools to help you with that. You don't have to pay for it. But you've got to start with the conversation to analyze, where am I at now? Is now even the time for me to buy? It might not be. You might have a bunch of student loans, or you might have something that's preventing you, and that's okay. It's just, let's get a game plan and say, this is where you are now, this is where the market is, but let's get a game plan together so that we can figure out, how do we get you from A to B in as shortest period of time with as little amount of money. Don't try to fix your credit on your own because you think if you pay that collection, it's going to jump your score up. Don't do that. Like, that's not going to happen. It's just going to report as a zero balance on your credit report, and your score is not going to change. We could have used that money for your down payment.
Yeah.
So the market is what it is. It's a tough market. But if you have the conversation now to line your dominoes up, we can help you get there. But you got to have a conversation. That doesn't mean we have to pull your credit right away.
Yeah.
But you got to get educated, have an advisor sit with you so that they can build out a game plan. You're not going to go to the Super Bowl without a game plan.
So last question before we land the plane, right? Obviously, you are tremendously well-versed. And, I know my stuff, but I know you know it probably 10 times better than I do, right? Where did you learn all this stuff?
Believe it or not, I YouTubed a lot of it. So some of the coaching I've done is I've gone to Todd Duncan. He's been a coach. He's a kind of well-known mortgage coach, but you learn the most just through conversations with client and reading books and YouTubing. Like I would YouTube. There's a mortgage coach channel, and it's on YouTube, and you can hear from top producers. It's free, so I'm frugal. It's free, and you can type in mortgage coach into YouTube and hear what these top producers are doing. I think they interview, it's kind of like the old school way of a podcast. They interview a top producer nationwide every Tuesday and Friday. So I would sit there and I would listen, and they do sell a software. You don't have to buy the software, but you will learn what these top producers are doing and then put your spin on it, right? And so you gotta research, you gotta study, you gotta YouTube.
Are you using the Fannie Mae selling guide?
Yeah, all the time.
Yeah.
Yeah.
So it's so wordy.
Oh
It's
my
so
gosh.
wordy.
Sometimes I feel like it's like reading the Bible and it's like up for your own.
Yeah,
you know, I'm like, is there a dumbed down version? Is there like a mortgage guideline
You
for
should
dummies?
come out with the Mortgage Nerd for Dummies
I mean,
Fannie Mae selling guide.
yeah, there's a lot of words. I'm like the type of person, if you send me an email and it's got like,
Just give me the highlights.
just like, is there ever a black and white answer? It's like sometimes Fannie Mae's like, well, if this, but then this, and then this. And it's like, dude, is it yes or no? Like
That's
what?
it.
Yeah.
That's
Is
it.
it yes or no? So.
All right, so obviously this has been big for me. I tried to, tried not to steal it too much of her, but like it's been such an honor to have you on the show. Before we land the plane, I want you to go ahead and give all of our visionaries and your nerds out there, how can they get a hold of you? What type of social media do you have?
Instagram is usually the best. Just go to @themortgagenerd and you'll find me. But I'm on Facebook, TikTok, Instagram. If you Google The Mortgage Nerd, you'll find me.
Facts, big facts. So I'll let you do it, Mo.
Yeah, we have reached the point of the show. It is time to land the plane. You did do that, didn't you?
Yeah.
Oh, my goodness. This is brought to you by the good folks at Sagamore Spirit. Thank you to Tim, Kevin Plank, everybody out in Maryland associated with this partnership. We definitely appreciate you. Visionaries, again, we don't have anything on the show that we don't stand behind. Get to your favorite specs, goody, Twin Liquors, whatever your neighborhood liquor store is, and get you a bottle of Sagamore Spirit. We promise you will not be disappointed.
There are a few hard truths to whiskey that most brands don't like to admit. First, there's a lot of it. And second, despite its lore and romance, whiskey is often complex and intimidating. Is that high or low proof? Toasted or charred? Aged or finished? Straight or blended? Imported or American? Endless options, endless questions, endless confusion. But there is a whiskey out there that makes selecting it simple. An exceptional spirit made with local ingredients and committed to its communities. That's us. That's Sagamore Spirit. Sagamore Spirit has been and always will be more than just whiskey. Our work, your work, is greater than the sum of its parts. Keep the momentum moving. And one more thing. It's whiskey. Have fun with it.
We ask everybody the same questions when we land the plane on the show. There is, yeah, absolutely.
Let's
Cheers.
Don't shoot it. Just sip on it.
We ask everybody these same questions. It's you. There's a round table with 5 other people. You get to have whoever you want at your table. The only stipulation or caveat, if you will, is that you can't have, whatever religious deity you believe in at the
God.
table.
Okay.
Outside of that, who do you want your table, dead or alive?
Ooh, dead or alive? Well, I would have to say Kobe just because that's just, we have
So
to.
petty.
Yeah, Kobe, the best basketball player. I would have my husband, Jason. I would have my twin sister, Deborah.
Shout out to the twin. I like her. She's cool.
Yeah,
She's really
she
cool.
keeps me sane. I would have probably Todd Duncan, my coach. And I would have, gosh,
You got one seat left.
I know.
So I hope you don't have more than one child.
Oh, well, Carter's 5. I guess we'll throw Carter in there. He's 5. He can have a seat.
Well, it
at the
doesn't
table.
have to be Carter. It can be anybody.
Give her a 6-man. Go ahead.
It's okay. We'll do. I would say Mandy, who's my very, 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 very best friend, but I would say Mandy as well.
Okay.
Dig it.
Love it. I like to ask this question to really get an in-depth look on at a person, right? If you were a book, what would be the title of your book?
Book nerd.
Book nerd?
Man, title of my book. What comes first to my mind is just keeping it real. Because I think sometimes when I feel like people look at me, they'll stereotype me in a certain way. And it's like I've had people not like me because they think that life was handed to me. And so it's like that iceberg effect. You only see the top of the iceberg.
Right. That's right.
But there's so much more to it. So don't judge or stereotype. It's like maybe I would just have an iceberg with nerd glasses and be like, read me.
That's good.
Yeah.
I think you should. Yeah, I definitely think you should. What's the long-term vision for the mortgage nerd?
I've moved into a journey of wanting to bring on additional loan officers. So my team right now consists of just myself, and I have 2 up-and-coming loan officers, but I feel like in order for me to make a bigger impact and to get more fulfillment out of my life, I don't necessarily want to write more loans, but I want to teach the strategies that I've done to get to where I am to other people to change their life and just help them get there quicker. Because I think a lot of coaching programs that are out there today, they're loan officers that were in the business 15 or 20 years ago, and they're trying to teach things to implement today. And it's like, man, that's so like old school. You don't.
It's antiquated.
Yeah, I mean, you're not making. It's like call 40 agents every single Monday, and so I'm at this place right now where I'm like, these loan officers are starving. They're paying money because they're in search for need, and they're giving it to people who are teaching old strategies. I am using modern day strategies that can help you. Like I just did a master class on how to present interest rates, and it's a modern way of doing it, but it's how people want to be communicated with today, not back in the old days. So I'm at the point where I am expanding and bringing on loan officers, teaching them what I've done so that they can change their family, their kids, and create generational wealth.
Can you teach an old dog new tricks?
Well, I taught my husband new tricks, so.
I'm not going to go through that.
So many different directions.
I mean, here's the thing is like, I'm only going to bring on people who are willing to commit. And I know that these strategies work, but at the end of the day, it's like, here's the strategy. Now you got to put it into place. Like, that's going to be on you. I can't want it more than you do. And so that is going to depend on where your commitment level is. And I will say I run the 1996 Chicago Bulls type.
Oh, now you want to go with Jordan.
Yeah, yeah. But that's how our squad rolls. So I don't have a lot of C players. Like if you want to play in the squad, then you're going to have to show up and you're going to have to like be ready to play with the big dogs, because I don't personally have, if I tell you to do something and this is what you're going to need to do to build your realtor roster, and then we meet 2 weeks later and you didn't do it, I'm not spending any more time with you. You don't want it bad enough. Yeah. So.
And you mentioned the word time, right? I'm curious because I know it's very difficult to get a hold of you, right? How do you balance being a mom, being a wife, being a business owner? Where do you find the time besides being Superwoman?
Well, I think if you have a process in place, then so here, let me answer it to you this way. If you go to Chick-fil-A at 12 p.m. on a Saturday, you show up to that line and they can crank those sandwiches out faster than the Whataburger that's down the street at 12 p.m.
This is true.
You see what I'm saying?
Yeah.
So it's like, why can Chick-fil-A pump out all these sandwiches? And why is Chick-fil-A the most profitable fast food chain? And they're only open 6 days out of the week, not 7. Because they have systems and they have a process and they have role clarity and they have, they've mastered the drive-through. And so people think that I'm super busy. And Adam can tell you, he works with me 8 hours a day. I've defined a process. You order here, you pick your food up here. We don't have a lot of sandwiches returned to the kitchen, so the kitchen's not overworking. And if you have it mapped out and you have a process and it's how the sandwich is made every single time, you can get a lot of shit done. And so we helped over 700 families last year, and I'm not running around with my head cut off, but I've got a team, and I've built the team, I've trained the team. I inspect what I expect. So when you come on board, it's a 90-day boot camp. I'm looking at your emails. How are you communicating? And I'm micromanaging it for 90 days, and then you graduate. And it's like, because I want, when someone comes and does a loan with the Nerd Squad, I want that experience to be the same. You can go to any Chick-fil-A in the U.S. and you're going to get the same quality and the same service, and that's because their training program's on point. And that's how I want people to feel when they come to the Nerd Squad. You're going to get the same experience, no matter if you're a first-time home buyer, you're buying $1 million home or a $100,000 home. After closing, you're going to get the same equity report every single month, so you know how your home's performing. Everyone's treated the same. I don't care how much money you have. I want your experience to be the same. And if you can get that consistency, your snowball just grows and grows and grows, because then your realtors expect that consistency, and they're not guessing, is the sandwich going to have pickles on it or not? Like, I don't want to show up and my sandwich have pickles on it. But if you can produce consistently, then they're like, okay, I know that this loan's going to get to the finish line and I can go focus on selling real estate. And with your client, same thing. I know I'm going to get this rate. I know I'm going to see the rate board. I know I'm going to close on time. I know that she's going to follow up with me every single month so that when rates come down, that she's going to tell me when to pull the trigger, because I don't want to pull it too soon. I'm going to tell you when to pull the trigger. So is everybody else in America, because you're going to get a shit ton of solicitations, but you need to follow my lead, not that postcard you got in the mail. You got to tell them now. So it's just working smart and building processes and systems and having all the systems communicate to one another, that my 8 hours in a day could beat someone's 16 hours in a day. But I don't work my tail off. I did. There is a period of time where you grind. No mistake about it. I grinded. But then once you graduate, there is a light at the end of the tunnel if you do it right. You shouldn't stay in grind mode for that long.
Yeah, that's so good. That's so good. So, all right, we're now at that spot where, it's time to officially land the plane. I ask every single one of our guests. I know you're a fan of the show. You watched the show before. What advice would Denise Donoghue be giving herself from 5 years ago?
I would say believe in yourself, stick to your passion, and go all in. And as long as you stay true to who you are and you work your butt off and you go all in, then good things will happen. But you have to know that in life, shit's going to happen to you. You're going to fall down, and how resilient you are to get back up is going to be how you succeed. The most successes come from our failures. So I've been knocked down plenty of times in my life. We didn't talk about too much of those, but let's be real. I've been knocked down and I've learned, and then you get back up and you show up.
That's right.
Yeah.
That's right. I
So
love
it
it.
always comes back up the next day.
Yeah.
Yep. Exactly.
All right, so I'm going to actually fast forward the clock. I'm going to make you a wee bit older. Okay, so you're 5 years older. What advice is the older version of Denise Donoghue? What advice is she telling you today?
Not to say yes to everything, and not to put other people before her. That I only want to, I've got a small tribe of people that are my ride or dies. And if you're not in that tribe, I shouldn't exhaust my own needs or wants or feelings to appease you just because you might be more important than me or you might be more successful than me. It's like, I don't need that. So stay true to who you are and put boundaries around what you agree to or say yes to.
I love it. Well, Denise, Mortgage Nerd, this has been, beyond amazing for me personally as a lender, right, as a LO. Very, very grateful for your time, grateful for the opportunity for you to jump into the lab with us. Manifestation is real. I told y'all we would get her, and we got her into the lab. This has been outstanding. Visionaries, I hope you had a wonderful time watching today's episode. Remember, go ahead and like, subscribe, and share. And remember, each one of our guests are dropping nuggets of wisdom here on the Trail of Life. Ultimately, my friends, it's up to you to pick them up.
Visionaries, ladies and gentlemen, all of the above. My name is Ryan Mosley. He is Ryan Cuffey. Thank you again to Denise, the Mortgage Nerd Donoghue. And we'll see you guys next week on another great episode of the Vision Lab podcast.
Blessings.